Very good morning, everyone. Charles here, FRGNT Daily Chart Analysis. I hope you're all doing well. What is the date today? The 3rd of June, 2026. Time is just approaching 10 minutes to 7 local time here in Milan. I am a little bit late to the chart, but nevertheless, yesterday we took a beautiful take profit on EU, pretty much in line, well, 100% in line with the analysis that I posted online earlier in the day yesterday. So let's take a look. We had DXY first and foremost. Here we are, looking to see if the DXY would potentially turn around from either one of those points of interest. To be honest, we're just using the DXY in line with confluence to see whether or not our cross pairs could potentially be ready for a long or for a short. So let's take a look on the charts to see where we lie. While we're there, in fact, we'll head to EU just to show you. 22 hours ago, EU was looking at a short from, I'll be honest, either one of those areas, providing I get a break of structure and my entry criteria presents itself. So now we'll take a look to the charts to see what materialized. Let's have a look. So EU, well, first of all, we'll go to the DXY to see how it held. We were looking potentially for DXY weakness to come into the market initially if this order block was to lie true, come back up and retest, and then we'll get the weakness potentially then for that DXY strength to roll into the market, as explained in the breakdown video that I gave alongside the analysis. So my thought process was, well, if the DXY is indeed in that daily range that we can quite clearly see that it is, I believe that potentially there could be room towards the upside before then, of course, refilling the lows of that range. We had that 4-hour order block bottom left-hand chart where price was gravitating towards it, rejected it, but the 4-hour 50 MA then came into play and held price up. Now, how does that 4-hour 50 MA play around with our buyers? Well, on my analysis, you saw this was a structure point. Let me go back just so we can show you, or I can show you rather. Where are we? DXY, here we go. So we had this as a structure point on the DXY. I didn't put the order block on there because I was more so really hedging towards DXY weakness initially. But with further analysis, I realized, well, if that's a structure point in the market that caused, let's say, the most recent high in the market, you can see here how I put a circle around that yesterday. That is a high. So where that high came from, it is in the speculator. So whether we're going to say the high was materializing from this area here, or did it come from this area, it's down to us, it's down to you as a trader to try and understand at what point would you look to sell the DXY comfortably. With that said, the inverse operation is very much so still valid. Where would you be comfortable looking for a long on that DXY as well, based on structure? So I didn't take a long and immediately, let's say, on the DXY to have that confluence, and neither did I take an immediate position shorting that shorting the strength of the DXY, which would be the cross pair shorting Euro US dollar. I did eventually, but what we can see here, the order block was placed in the market, and then straight away I'm going over to the cross pair I was looking to speculate on to see whether or not it could be ready for that turnaround. So could that be US dollar CAD longs? Unfortunately, that didn't materialize because I wanted US dollar CAD to come down to an area of interest based on higher time frame directional buyers for me to take a long position from, and that's this refined area here on the 4-hour time frame here, but refined over to the 15. We can see it's quite similar, in line with we made a push off from that market. So therefore, it's down to the speculator to try and understand, are we going to be looking for a long from these lows or a long from this intermediate level just here? Nevertheless, so you can see US dollar CAD, that certainly wasn't a play for me. GU. Could I have potentially taken a short on GU? Well, there was a session high in the market. We've had price move off. Wasn't really convinced that this was a break of structure. So although we had a nice confluence on the DXY, it's very important to understand that whether your crosspair also looks good, it has to also be in a nice point of interest to then take that confluence and stack it in your favor. So for me at the time, GU wasn't aligning in terms of price action and structure. However, with that said, I would take a GU short from these absolute highs with no doubt whatsoever. Now we'll come to EU. EU for me, it looks incredibly messy, I must say, but let me try and bring it up slightly larger so you can have a better look. Let's move this to the side, and here we go. So EU, I was very much so interested in EU. We've got the higher time frame directional bias first and foremost. Let me delete some of these illustrations and then perhaps I'll end up putting them back on for you to understand. But nevertheless, let's start from a bit of a blank canvas. So first thing in the morning, EU was recognizing that there could be a potential Asia range short. That's fair to say. Can I identify that there's a break of structure to the left? Absolutely. If we go basics in terms of higher highs, higher lows, expecting a higher high, we didn't get that higher high, but in fact what we had in comparison to what we didn't have on GU was this break of structure to the left, giving us that first lower low in the market. So of course when price wants to start to gravitate back up towards that area, absolutely I'm expecting a reaction from that area pretty much at some point. I'd like to hope so. What I did have on the market, I must say, was another 15-minute order block here. But as soon as price closed above it, it's very simple for me. Get rid of it, revert to the higher time frame order block. So that's what the higher order block. And something I love to always preach and say is if you're going to look for a position, try to look, let's say, in a short position when you're refining your higher time frame order blocks down. Really attempt to refine your order block to as high as you possibly can. That will give you a good enough reason or a good enough place to put your stop loss. A comfortable stop loss placement is always what we're after. Nevertheless, so an Asia range position was potentially presenting itself to the lows to fill Asia. However, I wasn't looking to take this position immediately, just simply based on a 1 minute break of structure, because what I was looking to understand is, well, is that DXY going to potentially hold from that area, and can that help me with my confidence to take DXY to the highs? Of course, then the inverse to that would be shorting Euro US dollar. So we waited, we identified some structure points on the lower time frame. You can see that just here. We had that break of structure. Price then came back up to that 15-minute order block that broke that structure point, and that most importantly, that 15-minute order block was tapped. Therefore, I could look for an immediate position straight from that order block, but I wanted some additional confirmation, I must say. And what I found was we had this 15-minute order block as a result of a 15-minute bearish candle. Then I waited for price then to re-break this structure point, which we can see just subtly, but we'll take the facts of the market. And I'll put an illustration just there for you to have a good look. So we had a low in the market, then we had price come back up, create that lower low, lower high, lower low continuation. And that's all she wrote, to be honest. It's very simple ideology, and that was a 3% return on the investment, just like so. So pretty good day yesterday. That was the only position I took. In all honesty, I was looking at GCAD. Didn't take it in the end, to be honest with you, and well, nothing really happened on GCAD anyway, unfortunately. AUD USD was also looking at a potential short on that pair, but again, nothing really happened. Certainly there could have been a position there, but I was pretty happy with the EU short that I took. And as you can see, EU AU is pretty similar, to be honest. Evidently, the euro is just incredibly weak in comparison, and then the dollar is having more of an effect on, the strength of the dollar is having more of an effect on that euro. As opposed to the Aussie dollar and the pound. So that was the only position there. So that's a bit of a breakdown in terms of yesterday. And if we take a bit of a quick look to the DXY to see how that structure point held, pretty beautiful, right? So this is the confirmation that we were looking to see if it held. Price went. That's us being patient on EU for the short. Price came back. I already had the confirmation on EU that we rebroke structure. The DXY was giving me the confirmation that that structure point in the market is indeed holding. And then, of course, my anticipation is, of course, the higher high to be played, to come into play. However, what's more important is I get a reaction from that DXY, and that's exactly what we had. So we had that reaction, and of course, that reaction allowed us to start managing the position. And then, of course, the reaction in terms of price on the DXY looking to make that higher high was enough to give us that 1 to 3 on Euro US dollar short. So that's the rundown, to be quite honest. A very, I'd say, a simple trading day. These days do happen. It's just a matter of being patient and understanding that the strategy itself is not complex, but it's something that must be weighted upon. You really can't chase price action. You have to essentially wait for price action to develop, allow price to move in your direction of trade without you. Of course, you get all the feelings coming in. That's very natural as a trader to feel like the price is moving without you. That's the trade. But as I always preach, that's essentially price just developing for you. If price is creating a better opportunity by moving in the direction that you want it to go, expect it then to come back. That's your strategy. When it comes back, entry criteria, double check that the DXY or any other confluence, for example, the yen basket, if you're trading UJ, for example, you've got the additional benefit you're trading. You can watch the DXY, you can have a look at the Japanese yen to see how that's performing. Use your confluence, stack your confluence, and take your position. And it's just a great one to really write home about and understand that once you're set on your strategy, trading honestly just becomes the easiest thing in the world. You really just wait for your strategy to present itself, wait for your entry criteria to present itself, and take the position. It really is as simple as that. I can't stress it enough. One thing that I will mention before going is just to remind you all that trading, it's a marathon without a finish line. There is no sprint in sight. The only finish line is when you decide to pack trading in. So what's the rush? As I always say, the only rush that is being applied to trading is you as an individual trying to pass funded challenges. You create your own pressures. There are no time limits. If you're trading your own funded capital, what is the rush? If you're trading investor capital, they're not expecting you to rush. It's a very steady, easy game of growth. Therefore, you can wait for these higher probable types of setup. You can see nothing here. It's probably something that you haven't seen before. It's just strategy, wait for price to develop, entry criteria, confirmation, trade, and just rinse and repeat that model and process over and over again. And well, you will be profitable, that's for sure. So thank you very much for your attention. Thank you for your support across all the channels. I do appreciate it. As always, take care in your trading journey. And as I say, don't rush the process. It's a very, very, very simple game if you're able to master yourself. All the very best, Charles.